All right, deal nerds. I feel like this week was something I anticipated, meaning it has been an absolute calamity in the market. And here I am collecting nickels in front of the steamroller. And that has been my strategy. I'll tell you what I did and the lessons I learned. I'm up to 458 something subscribers, maybe 460. I haven't checked lately. Thank you for your support. Please remember the show is organized chronologically in the Income Investing Roadmap playlist. There are a couple of others, as you know. Most importantly, do your own homework. Don't take my word for it. Let's get started. We have 4 units. First is to review the market, and it kind of looks like that little chart, that picture there. The absolute craziness, and there is still some money to be made, so I reached out and grabbed a couple of handfuls of nickels there. And I look ahead the next 2 weeks, and I'll share my thesis and my holdings. Yeah, the last 3 months, this is from December 7th to March 7th. There is the NASDAQ just careening off a cliff there. And here, the blue line is my portfolio, and it has barely noticed. And the reason it is that way is because I'm mostly in fixed income, as you know. My equity portfolio finally has stabilized above the NASDAQ as well after this disaster with Calmaine Foods, and I got out of that. So the question then is, where do we go from here? Well, I have 1% allocation to stocks, and I've been doing that proverbial collecting nickels in front of a steamroller. This is a Warren Buffett anecdote where he said, hey, you know what? You could try and go for really small gains, but you better be careful with your allocation if you suspect a market downturn. Otherwise, the steamroller will come get you. And so, as you can see, I'm selling things at a gain. I don't have too many losses to record, and that's because I've kept the duds. And I'll tell you where I made money, and I'll tell you what I'm keeping in a couple of moments. I'm still not very up on where the market is headed in the next 2 weeks. And before I tell you more, I need to remind you that I'm not a wealth management advisor. This is not tax or investment advice. And I need you to remember and make your own decisions and do your own homework. Well, we have a very frothy market ahead of us. There is the tariff breather for a month. However, the jobs report was a little iffy. The FOMC meets on March 20th. All indications are it's too early for them to cut rates, so they're probably going to hold it steady. There is the threat of a government shutdown. There is the re-escalation of the Middle East war, the Ukraine war. There is a lot coming at us in the next 3 weeks. And what that probably means is no matter how these things pan out, there will be uncertainty. And that means, unfortunately, still some bleak days ahead for the market. So my investment thesis is informed by that formula. And so what I have done is created alerts on specific stocks that I think are fantastic stocks, but I'm looking for a 10% plus correction. When these alerts go off, I did buy DT, Dynatrace. You can take a look at them. They posted some really good numbers. At some point, they probably will join the S&P 500. They're in the small cap 500 now. And so, I put alerts and I sit there and I patiently wait. And if it is on a day that it's crashed more than 10%, I just say, well, maybe I'll look for another 10%. And so that's kind of what I've been doing. I've not been buying too much at all. I've been selling anything at a profit, which means everything I hold is at a loss. Everything I sold were things that I bought with more than a 10% crash that kind of went up for a day or two and I sold them. So just like this guy, I'm fishing for nickels in front of an absolute calamity. My holdings are VC Real Estate, as you know, AT&T, Dynatrace is a new one, Baker Hughes. And as you can see, once I cross Baker Hughes, these are deep down in a burning hill in the sense that they are down by double digits. Miller Industries down by almost 30%. They gave a low forecast and the market punished them. And so, long story short, I own a variety of stocks still, but a small allocation to each of them, totaling 1% of my total portfolio. I'm still going to sit and wait out the next 3 weeks. I hope you're doing something fun. Let me know if you found a Dynatrace of your own doing. I did buy a couple of casino stocks. What I mean by that is I bought Robinhood and Interactive Brokers, and they both are reporting unusually high trading volume. Trading volume for any platform is good because they make something on the spread. And so I bought both of those trading houses. I told you about Dynatrace. The other company I bought is Manhattan Associates. Manhattan Associates, their CEO said, we're going to have a tough year, and the market punished them. It destroyed their stock by 30%. And the new CEO has come on board, and the market really hasn't, in my opinion, changed that much. And so I bought Manhattan and Dynatrace. I'm going to ride them a little longer. The rest of them all are there for me to turn a very small profit and immediately dump while I maintain 99% on fixed income. You do you. Remember, even a broken clock is right twice a day, so I may be wrong. Make sure you invest smartly and share any tips you have. Thank you.